Hello and welcome to Bloomberg Quint. As we reported earlier, Lakshmi Vilas Bank and Indiabulls Housing Finance have announced a merger. The private sector bank and the housing finance company will have a total net worth just shy of about 20,000 crore. To discuss more details about this deal as well as what is going to happen to Lakshmi Vilas Bank post this merger, we have with us Mr. Parthasarathi Mukherjee, the MD and CEO of the bank on the phone line. Mr. Mukherjee, let me first start off with the obvious question on the shareholding of the bank and how exactly that is going to change, especially with respect to what is going to happen with the promoter stake, the Indiabulls promoters.
In the first place, of course, the bank's existing promoters, of course, have a relatively small stake, somewhere in the region of 7+%, which will drop down substantially, of course, post the merger. And effectively, the Indiabulls promoters' stake would then result in somewhere in the region of 19+%. And that is what the calculations indicate at the present moment. However, that is subject to, of course, any changes that might happen between now and then.
Sir, on this 19% point now, I know this question has been asked to you multiple times, but with respect to how the RBI views promoter stake, especially promoter coming from a very, prominent real estate background, how do you think this 19% stake is going to be viewed by the regulator?
I really don't want to speculate on that at this moment. Quite frankly, I have not even examined that factor. It's something that RBI will take a view on, and I'm sure RBI will direct appropriately. And accordingly, I'm sure all of us will act accordingly. I really wouldn't like to get into this matter at this moment. That's something that will happen over time. My sense is this entire process will take a bit of time. So in the process, and in the meanwhile, there could be a lot of changes. I am sure all concerned would be engaged in this matter and will take an appropriate decision.
Fair enough. Now, we've already seen, Indiabulls Housing Finance lose out on a banking license option, banking license application back in 2013.
You'll appreciate that at that particular point of time, a number of entities had applied for banking licenses. Only 2 got the licenses. In theory, the others, yes, they might have lost out, but it's not as if they were rejected or something. So, at that point of time, what was indicated was that a lot of others could then apply through the on-tap route. So that situation is maintained at this moment. So I don't think that itself will dictate what will happen to our proposal. I'm sure the Reserve Bank will look at it objectively and take an appropriate view.
Fair enough. In terms of, the bank's book at this point in time, now I'm looking at the annual report from 2017-18. There was a considerable, concentration of I'm sorry.
Yes, tell me.
On the gross NPA portion, there is a concentration in the top 20 borrowers. How do you view this in terms of, now that the bank is going ahead with this merger, as and when the regulatory approvals do come in, do you think that this sort of chunky NPA problem is going to impact the combined entity?
I doubt very much. We've largely seen through our NPA problem, and the stress the stress has already played out mostly. So going forward, it's a relatively clean bank that we see today. Now, whatever is an NPA at this present moment, of course, is out there, and the effort is to recover as much as we can from it. And I don't really anticipate this becoming an issue in the merger.
Fair enough. But with respect to the rest of the book, is there any stress that is pending?
Quite frankly, the stress now is minimal. I mean, whatever is a normal day-to-day BAU stress, but nothing really much. I don't really anticipate very large slippages in the coming quarters.
So, obviously, the size of Indiabulls Housing Finance's book is considerably larger than what Lakshmi Vilas Bank has at this point in time. And obviously, all of this, retail lending, especially to a secured product like housing finance, will come into the bank's book. But other than that, any other sort of, enhancement on the loan book that you see?
The bank, in any case, was irrespective of this particular transaction, the bank was planning to go ahead with growing the lending book. And the plan was, of course, to incrementally focus on the SME book and the retail book. This will obviously give us an additional leg up. And my sense is the combined efforts of the two entities will result in a first-class franchise being developed.
Are there any board changes or any other changes that are being envisaged at this point in time at Lakshmi Vilas Bank's level? Now that there will be representatives from Indiabulls Housing Finance who will enter the board, of course.
That will happen only after the merger is consummated, which of course is still some way off. My sense is I can't see that happening tomorrow or day after. I mean, it will obviously take its time. So in the meanwhile, of course, life goes on in the bank, just as it will go on at Indiabulls. And the real board changes would, of course, be effective only when the merger is completed.
Fair enough. You are going to be providing that sort of long-term, long-term funds to Indiabulls Housing Finance, which is already going through a considerable liquidity crunch. How do you think that is going to play out once you change your name, once you become a new identity? Do you think that there is going to be some impact on your depositors?
I don't think so. If anything, depositors will take comfort from the fact that the bank now is playing on a wider scale. And on a wider platform, so to say. So if anything, it will give a lot of comfort to the depositors. This bank prides itself on a very strong and loyal customer base. Those customers will now get an added comfort of having a large, profitable franchise backing the bank. Okay.
According to the estimates that Indiabulls had shared with us earlier in an interview, their shareholding as an entity would be above 90% in the bank. What I'm trying to understand is that with respect to them changing the bank's name, a majority of their shareholding, of course, board representation. Do you see this as a backdoor entry for them into the banking system?
Not really. In the first place, do appreciate that when you say that their shareholding will be 90%, that's not entirely the right way to look at it. After all, they have public shareholding and they have promoter shareholding.
Sure.
What is material for you to look at is the promoter shareholding, which I indicated that in calculation terms comes to about 19%. I mean, there are entities like life insurance corporations holding at Indiabulls. They have a small holding in our bank too. So I imagine Life Insurance Corporation of India would be a shareholder of some size in the bank. But that does not really amount to a backdoor entry for Indiabulls as such. Clearly, the Indiabulls promoter, of course, Mr. Gehlot, would have a shareholding in this bank. And it will be obviously not insignificant, but that's about it.
What will be the bank's endeavor in the coming few months as you wait for the necessary approvals to come in and before this merger actually takes place?
So our effort will be to continue to grow the business on our own in any case, as we prepare ourselves for the merger.
Right. And you'll focus on retail and SME as a mode to sort of push that. How big is that currently of your total book?
Well, today the corporate book is about 37%. The non-corporate is about 63%. So retail and SME being obviously the big part of it.
Right. When you look at private sector banks in general across India, typically that ratio is the other way around. You would see a corporate, an overhang of corporate loans on their books. How much further do you think your retail and SME proportion can increase?
In the medium term, before this merger discussion, our plans were in the medium term to have a mix which would be something like 30% SME, 30% retail.
And is that the case right now? How far are you from that?
Well, we are tending towards that, but we're probably still some way off. As I said, 37% is corporate at the moment. And so retail and SME between them would be little under 50%.
Fair enough. In terms of your pan-India presence that you're planning after this merger, how do you think that is going to pan out? Because so far, the bank has been restricted to certain portions of the country, and of course, a large portion of the country is already, pretty concentrated with a lot of banks playing the field.
Well, we've always wanted to play to our strengths, and the South obviously is the area of strength for us. With limited resources, it always makes sense not to spread yourself too thin in any particular market. So we focused on the South. Now this added advantage of getting a reasonably good footprint in the North and West will clearly help us to chart out a new course. And effectively, we will now be an all-India bank.
Okay. How soon do you think will you apply to the RBI for their approval in this?
A bit too early. Just made the announcement, so obviously a bit of legwork has to happen in the meanwhile. Well, the effort will be to go to RBI at the earliest, but only after we've completed all the work.
On the Indiabulls side, they have a former deputy governor of the RBI helping them through this entire deal. On your side, who's advising you, sir?
We are in the process of appointing our advisors.
All right. Thank you so much, Mr. Mukherjee, for joining us on this conversation.
You're welcome.
And thank you for watching.